Welcome to Adda 24/7. We are in CCP exam 23 session and today's topic is detailed study of asset reconstruction company. Very important part. Why? Because ARCs, we call it ARCs. Asset reconstruction means ARCs. These companies have come up as a huge companies now for the means for getting these loans which are NPA into the standard form again. Means they are converting these, that's why the name is asset reconstruction. Those loans which have gone bad, they are reconstructed. So that's why follow this topic till the end. Very important topic. Okay. So let's start directly without wasting the time. See, the point is asset reconstruction's business model. What is the business model of this ARC? So the business model of ARC is basically, see this. What does it do? It does banks basically here. Firstly, we'll have to understand the banks first. Banks are financial institutions that are engaged principally in the business of money, in the business of money lending and money borrowing. Right? Basically, look at this. This image tells you there is a depositor who is depositing the money, and there is a loan taker whose borrower whose loan is given to that customer. So this is the basic model of banking, taking money from somebody and giving it to somebody. And in between getting this margin is the bank's income. The customer base for the banking sector is very large and there is a substantial risk involved in lending money, isn't it? Substantial risk. What do you mean by substantial risk and lending money? Now look at your own bank only. How many of your customers do you know means are big customers? Very few, but there are very small customers as such. So in that case, what happens? Banks have very huge risk as such. Why? Because when we lend it to those companies, or those customers also, we are at the risk of NPAs. So that's why the customer base is very large and that's why there is a substantial risk in lending money. While the bank always has the option of taking legal action on the defaulting borrower, it's not economically feasible to do so, isn't it? See here, nowadays even this legal action has been made easy by this government. We have that SARFAESI Act is there, plus NCLT is there for big companies. But then also, it's after all, why to go for some legal action if it can be settled with amicably between somebody? That is the logic applied. So the banks have the option of taking the legal action. These banks can go under SARFAESI Act. These banks can go under this DRT Act. They can go under this NCLT Act for big companies. But if it is possible to be handled between companies only, so let's handle it that way. That is the logic applied. The bank sometimes decides just to cut its losses, clean up its balance sheet, and keep the business moving towards the better revenues. So your bank, what does it say? Bank says that nothing doing. Don't go for any legal action. In fact, they can go it in two ways. Banks move out in two ways. Always when there is an NPA, banks go for this legal action also. Number one, legal also. And second option is they go for this ARCs also. Okay, ARCs. So banks take two-pronged strategies. If it is possible to sell that asset at a considerable price to an ARC, then it's okay. So this is where the ARC, asset reconstruction company, comes in. So when the bank doesn't want to take this legal action, it goes for this commercial action. Okay. So here the role of ARC comes in. What is ARC now? Say this. Asset reconstruction company is a special type of financial institution that buys, now look at this, that buys the debtors of the bank at a mutually agreed value and attempts to recover the debts or associated securities by itself. So it buys the debtors of the bank at mutually agreed value. Mutually agreed value means the value at which I and the bank, suppose if I am the ARC, myself and the bank decide at what rate should I buy. Means what does it mean? Again, let me explain you better in this. Suppose if I am having an NPA of 100 crores, 100 CR. So I am the bank. Okay, so I'm having an NPA of let's say 100 crores. So what do I decide? Instead of going in for legal action, it will take a lot of time as well as it will take a lot of energy, money in this. So I'll try to sell it to some ARC. So what will ARC do? ARC will purchase this loan at a cheapest price. So it may purchase it at 25 CR. So bank takes a hit of 75 CR over here. Okay. So this is always, ARC always takes it at the least price possible. So at the agreed value, both should agree. Huh? It's not that only ARC decides. It's both banks and the ARC should decide. And then what does ARC do? ARC tries to recover the debts in associated securities by itself. So this NPA now becomes the headache of this ARC. So ARC will try, see here, this loan is of 100 CR. It is taken at 25 CR. So if ARC is able to recover, let's say 75 CR, so 75 CR out of this NPA, then also ARC has got 50 CR, isn't it? So isn't it a good deal for ARC? And why does the SBI sell it? So if ARC can do it, can't SBI do it? Yes, SBI also can do it. Any bank can do it. That is called as legal action. So legal action can also be done by this bank. If this bank doesn't want the headache of going into the legal action, it will sell it to the ARC at the agreed price. Now the asset reconstruction company or ARCs are registered under the RBI and regulated under the Securitization and Reconstruction of Financial Assets and Enforcement of Securities Interest Act 2002. So this is known as SURFACE Act. So these ARCs have come into existence after this SURFACE Act. So it means are registered under the any ARC, if it is to be formed, it has to be registered under the RBI. And it is regulated by what? It is regulated by the SURFACE Act. Okay. So we'll do it someday else, or we'll do it in the separate special class on NPS. Then we have doubtful 1, D1 I'll write it. Then we have doubtful 2. Some banks call it doubtful 3 also now. And then there is loss asset. But what our RBI has done is this D3 has been almost removed now. Everything is lost directly. After D2, everything is lost. So understand this, substandard, then D1, D2 and then loss. Before the loan becomes NPA, there is also something called as who can tell me? Before the loan becomes NPA, which gives you the sign of the NPAs, that the loan is going to become NPA. So what is that called as? Who can tell me? Type fast in the comment section. Before the loan becomes NPA, what is that called as? Everyone. Yes? Something related to SMA. SMA, anything remember? Anyone remember the SMA? Correct. It is SMA 0. SMA 0. Then SMA 1. Right? SMA 1. And then SMA 2. Right? Again, there is a detailed study about this from 0 to 30 days, 30 to 60, 60 to 90. Okay. This is all known as SMA 0, 1, 2. And after that, NPA starts. Okay, what is NPA over here? Substandard means what? Who can tell me about what is substandard? Substandard is when, yes, just type. Is it first year? I'll ask you a specific question. Is substandard the first year of NPA or second year of NPA? Is substandard the first year of NPA or second year of NPA? Type fast. It is. Is it first year or second year? Yes, please. Yes, it is. Correct. It is first year. This is when the loan becomes NPA, it becomes first year. First year it becomes NPA. Then what is D1? D1 means doubtful 1. Which is this year? After substandard, it is from 1 to 2. 1 to 2 years. When the loan still remains NPA, nothing is recovered, then also it's called as D1. Now what is D2 then? It starts from the third year, 1 to 2. In fact, you can call it 2. 1 to 2. Okay, so this is 0 to 1. 0 to 1. That is a better classification. Then it is 1 to 2. Then it is 2 to 4. Now this is for 2 years. Remember, D2 is for 2 years. 2 to 4. And after that it is loss. Anything beyond 4 is loss. Now one thing which you should always remember. that loss asset doesn't have to follow these stages only. Means it's not that any loss asset will first become substandard, then doubtful one, then doubtful two, then loss asset. No. Loss asset can become loss asset anytime. Even if it is a standard asset today, here before this SMA we have standard. Okay. So even if any loan is a standard asset today, standard means good asset. If any loan is a good asset, then also it can directly become loss asset without going into the levels of substandard D1, D2. Directly loss. It can happen. What happened to Kingfisher Airlines, Vijay Mallya? Kingfisher was a good company, means double A rated company in fact. And one night, single night, it went into loss asset. What happened to Satyam Infoway? Many of you might not be in the banking, in the schools might at that time. Satyam Infoway. What happened to that? Standard company. One night gone. Enron, world. Just type on Google Enron. Enron was one of the biggest companies. What happened to Enron? One night, single night, gone. Okay. So that's what the point is. So understand it. ARCs take over the position of the debts of the bank that qualify as NPAs, non-performing assets. Thus, ARCs are engaged in the business of asset reconstruction or securitization or both. So both the things are done by ARC. Asset reconstruction also, securitization also, and both. Now, what is securitization? I'll explain. We are having a separate topic on this. Okay, I'll explain in this lecture only. All rights that were held by the lender, that is the bank, in respect of the debt will be transferred to the ARC, isn't it? Sure. As of now, what has happened is bank has sold. What is this asset reconstruction? All in all, bank sells this loan. Sells. Remember this part. Sells. Okay. Sells this loans to ARC. Now, once it is a seller-buyer relationship, the rights of the bank ceases to exist. Suppose if you buy something from a shop, okay, if you buy some, let's say, any mobile phone from the shop, and later that shopkeeper tells you that no, that is my mobile. Is it his? It's after all yours. Why? Because you have paid it. So this is the logic behind this, okay? So all rights that were held by the lender in respect of the bank, in respect of the debt, would be transferred to the ARC now, isn't it? So the required funds to purchase such debts can be raised from qualified buyers only. Now this is the important part. This is again an exam question. What is a qualified buyer? So remember, required funds to purchase such debts means what? If this ARC, which are the companies of ARC? Then anyone has the names of ARC? Many companies are there. In fact, every bank has some special company that's called as SPV. Every bank has floated an SPV, or a combination of banks have floated as SPV. And these act as ARCs. Now these ARCs require these funds to be whatever funds they require for buying that asset. So that fund, those funds can be received from whom? They can be received from who invest in them. The investors are qualified buyers, QB. Okay, see this QBs. They invest in this company and then ARC can buy it. What is asset reconstruction? It is acquisition of any right or interest of any bank or financial institution in the loans, advances, granted, debentures, bonds, guarantees, or any other credit facility extended by the bank for the purpose of realization. Means what? Acquisition. Understand this part. Acquisition of any right or interest. What does it mean? Any right or interest means as the bank was a seller, right? The bank is a seller, so the right of this bank are taken by this buyer then. That is ARC. So now the buyer owns all these assets. So acquisition of the right or interest of any bank or financial institution on loans. Look at this. Now ARC is not only related or limited to these loans, but it is also it also expands beyond these loans to advances granted. So that is again the part of loan. But here, look at this debenture. It makes its entry into debentures also bonds, Guarantees means anything which has become NPA. It can be a loan or it can be a debenture, okay, or any other credit facility extended by the banks for the purpose of its realization. Okay, so you'll say credit facility means what? Is bond debenture a credit facility? Yes, it is. Means bond a credit? Yes, it is. Depends on here. Whenever any bank, suppose if I am a bank, let me explain you this part. If I am the bank, okay, then what happens? I'll get the money from whom? I'll get the money from depositors. What will I do with this money? I'll either give it as a loan, right? Right? Loan. So loan means what? This becomes this advances, loans and advances. Or I can invest it in bonds of some bank, bonds, separate bonds. Okay. So I'm investing it in these bonds. It can be of any company also. It can be a government bond. It can be a private bond. Anything. Debenture we call it in bonds, private bonds. So I can invest in these bonds or debentures, both of them. Okay. Now, after all, what is happening? So even if I invested in bonds, after all, I'm giving money to somebody. Okay. So whenever I'm giving money to somebody, it's a type of credit facility. So extended by the banks for the purpose of its realization. Such loans, advances, bonds, guarantees, and other credit facilities are together known as financial assistance. So all these things, bonds, loans, this is known as financial assistance. Okay. What do you mean by this? Again, suppose if in exam tomorrow the question comes, what is financial assistance? Will you be able to answer it? Type yes in the comment section. What do you mean by again this financial assistance? Loans, advances, guarantees, and other credit facilities which are given by the bank are together known as financial assistance. Okay. Move on. Now, what is securitization? I told you I'll be taking this securitization topic. See, here, there are two parts. One is ARC, asset reconstruction, and second is securitization. But both can be combined, or both can go hand in hand. Securitization is acquisition of financial asset either way of issuing security receipts to the qualified buyers or any other means. So acquisition of financial assets. What do you mean by acquisition of financial assets? Financial assets of whom? Financial assets of the bank. This is the bank. The logic remains the same, or the model remains the same. Bank is selling the loans to this ARC. Or there is another name now, securitization company. Okay, it can sell it to this. Now I'll tell you, securitization does not only limit itself to NPS. Securitization can expand to some good loans also. Suppose if I am SBI and I'm having 1000 crores of home loans, I want to liquidate those. So what will I do? I'll sell it to that securitization company. I won't sell it to ARC. See here, ARC and securitization, there is a slight difference. Now, what is the point over here? It is the acquisition of financial assets either by way of issuing security receipts to the QBs, qualified buyers, or any other means. So, it is either by issuing security receipts to these QBs. Now, securitization means what? Security receipts. That is important. And what was ARC? This qualified buyer directly invested in that company. Here, this bank or this company, ARC, it gives a security receipt, means it's a sort of debenture of this company. Okay. So security receipts to the qualified buyer or any other means. Such security receipts would represent an undivided interest in the financial asset. Undivided means what? Whatever asset I am acquiring, suppose if I am acquiring a land or a factory of 100 crores at 25 crores only, and then somebody has invested in my company for buying that. So that person will get a proportionate proportionate share in that this company. Okay. So look at this. Banks use securitization to convert a group of assets into marketable securities. This is the logic of securitization. I'll tell you a simple thing what happens. Bank will sell these assets to the securitization company. Securitization company will sell it to various investors over here. all the investors, it will make small packets. Let's take an example. Suppose the loans are sold of 100, there's a 100 crore loan. It is sold to ARC. So what will ARC do? ARC will make it small packets of 1 crore. How many packets will it make? It will make 100 packets. And then it will sell it to those investors who are ready to invest in that NPA loan. Because why will this investor invest? This investor will invest because he is getting a loan or asset of, let's say, 100 crores at such a cheap price of almost 1 crore. So he is getting a proportionate interest in this. Okay. So that is known as securitization process. What is qualified buyer? So this qualified buyer, this term has come many times earlier also. In ARC also it has come. In this securitization company also it has come. So qualified buyers include financial institutions, insurance companies, banks, state finance corporation, state industrial development corporations, trustee or ARCs registered under SARFAESI, and asset management companies registered under SEBI that invest on the behalf of mutual funds, pension funds and FIIs. So this gives you the comprehensive definition of the QBs. Now it includes what? Just check this. Financial institutions means, what do you mean by financial institution? Any institution which deals in money. It can be a bank, it can be an NBFC, it can be a private party also. If I am having a huge money, let's say I am some richest guy in this world, and I am having huge money, individual. So I can deal in this as a QB also over here. Insurance companies means, now insurance, banks, state financial corporations. State financial corporations means those are promoted by the state governments. Many of the state governments have promoted their financial companies. State Industrial Development Corporation. Okay, so state industrial means similar to that of the SIDBs. Here, I am not saying SIDBs. SIDB is actually small industrial development. That's a central part. But similarly, states also design these such companies. So State Industrial Development Corporation, trustee, ARCs. ARCs already I have told you. Trustee means what? Trustee means it is always a trust. Now what does it mean? There can be various trusts who can invest as a QBs. They also want profits here. Trust, there are various private trusts also who work for profits. But in the balance sheet of any trust, you can't show any profit as such. It is always to be distributed for the benefit. But after all, it can earn something. So there are private trusts also who earn some income, and that income is then distributed. Profits can never be shown to any trust, remember. Okay, so ARCs registered under SARFAESI and asset management companies. Now this is second part. Asset management companies registered under SEBI. So asset management companies are registered under SEBI. Okay, that invest on behalf of this mutual funds, pension funds and FIIs. Now you will say, sir, just now you told me that ARC is registered with RBI, but that is ARC. This is AMC. Okay, that's a difference. Understand the difference between ARC, Asset Reconstruction Company, and AMC, Asset Management Company. Means what? For example, HDFC AMC. You have the share market. In share market, we have the share of this HDFC AMC. It is HDFC's asset management company. It's not ARC. Okay. The qualified buyers are the only persons from whom ARCs can raise funds. Look at this. ARC wants to raise funds. It can't raise it for any person, from any person. It has to raise from this QB only. And this QB needs to be registered. Okay. So I can be a QB, but I need to be registered with this this RBI also, SEBI also, and in fact main RBI and SEBI, yeah, two only. These two we need to be registered. Now, what is the working of ARC? How does the ARC work actually? The working of ARC can be summarized in the following diagram. How does this work? Say this: debtors, borrowers, obligators. Bank offers financial assistance. The borrower provides security for the financial assistance. This is very important. Security. Okay, so collateral should be there. It can be anything. It can be a financial or it can be a physical collateral. Okay, then without collateral, we give certain personal loans also, or we give some corporate loans also without collateral. So that can also be done. But remember, for any big loan, bank has to take some collateral either in form of this rating or in form of this financial collateral or in form of some physical collateral. Okay. So debtors, borrowers and obligators, bank provides the financial assistance. Then bank FIs financial institution transfer the bad loan, the NPAs to ARCs. So when this loan becomes NPA, this loan has become NPA over here. When this loan becomes NPA, this loan gets transferred to this ARC. ARC purchases the financial assets to realize the same. Means what? This ARC will purchase it from this bank and it will follow for that loan. This is very important part. Look at this. As I told you earlier, suppose if there is a loan of, let's say 100 crores, which is sold by the bank to this ARC for, let's say 25 crores. Okay, 100 crores sold to 25 crores at 25 crores to this ARC. So what will ARC do? ARC will have two methods. One, it will try to recover this 100 crores from that customer. Now imagine even if it recovers out of this 100 crores, only 75 crores it recovers, 75 CR. Then also it's benefit for this ARC because it had purchased it at 25 and it has realized the value of 75. So 50 crores it has earned. So ARC will be happy in this. Bank is happy because its loan of headache of this loan has gone out. Okay. Now third step is qualified buyer. Purchases security receipt. So this company requires 25 crores which are to be required to purchase this asset. Who pays that? That is given by this QB, qualified buyer. ARC issues security receipt representing undivided interest in the financial asset. So this QB will have an undivided interest. What do you mean by undivided interest? Suppose if this loan is of, this asset is of 100 crores now, and there are two QBs. Two of them have invested in this project as such. So both of them will be having a 50-50% share in this. Plus this ARC's own stake. Okay. So both will be having 50-50. If there are three, then 33-33. Depending on the agreement between that ARC and the QB. It depends on that agreement. Okay. The business of asset reconstruction or securitization may be commenced only after obtaining the registration certificate under the section 3 of SARFAESI Act 2002. This is the most important question in question from exam point of view. They always ask you the section. So the ARCs can get the license from can start their business only after getting the registration under the section 3 of the SARFAESI Act. This section is very important. Okay. Now main point again over here. The main requirement in this regard. Disregard means what? Disregard. Registration under SARFAESI Act. Disregard. The main requirement in this regard is that net owned funds as prescribed in RBI Act should be 100 crores or more. This is very important. If any ARC wants to register itself with the SARFAESI Act in the section 3, it has to have a net owned funds of 100 crores or more. Minimum 100 crores are required at any cost. Okay. The process of this asset reconstruction company by the ARC. So it is ARC over here. By ARC. The main intention of acquiring debts NPA is to ultimately realize the debts. Realize the debts means whatever it is acquired at, let's say 25 crores. So it has to get at least 75 crores from this. 75, this ARC wants to get 75, then only it will have profit. Right? However, the process is not the simple one. The ARCs have the following options in this regard. So what are the process? What are the options? Let's see that. Change or takeover of management of the business of the borrower. This is very important. Management change. whenever any ARC takes over the loan from the bank, ultimately gets the right to change the management of that company. Isn't it beautiful for for ARC? It will change the management. It will put its own person so that the company becomes from NPA, it starts moving towards the standard loan. Sale or lease of such business. So it has also got this option. Suppose if this business can be sold to somebody, somebody is ready to take it. Let's say ARC has purchased it for 25 crores. Okay. Now if there is some XYZ company who is ready to purchase it at 50 crores also. What will ARC do? ARC will say, okay, 25 I have bought, 50 I have sold, I am in profit. So it has earned a commission of 25 crores over here. Then third step is rescheduling the payment of debts. Means what? What do you mean by this rescheduling? Can anyone give me this logic of rescheduling? Have you done it anywhere in rescheduling? In which type of loans have you done this rescheduling? Can anyone tell me? Rescheduling is done in which type of loans? Yeah, it is correct. Defaulters. And that also which defaulters? Here, defaulters are of two types. Always remember. Defaulters are of two types. Okay. One is genuine. Genuine defaulter means it's actually a problem. Like in COVID, there are many genuine defaulters. But there is another which is called as willful. Willful. Okay. So this willful defaulter, there is no rehabilitation or rescheduling over here. Here it's just recovery. And for this genuine defaulter, we go for this rescheduling. Because the person is genuine, he is ready to pay. Okay, but he is not having that much money. Okay. So rescheduling the payments of the debts, offering alternative schemes, arrangement of the payments of the same. So if any company is in genuine problem and it is ready to pay, its intention is good, then it can be rescheduled. Enforcing the security interest offered in accordance with the law. So whatever is the security interest, whatever is legal, you can definitely take the assets of that company. Taking possession of the assets offered by the security, isn't it? Taking possession, taking that asset in your hands. Because after all, you have purchased that loan then. Okay. Converting the portion of the debt into shares, that is also a point. This is known as convertible debt or hybrid debt. So this debt can be converted into shares and then it can be sold to anyone who is interested in buying this. Okay. Types of debts that ARC can take over. So ARC can take over only secured debts. Remember, look at this, secured debt, which have been classified as NPS. Secured means which are secured by a collateral. There is a collateral attached to it. As I told you, there is a personal loan without any security, or there are certain corporate loans without any security. So ARCs don't take that. If it is backed by some security, only then it can take. In case of debentures, bonds remain unpaid. The beneficiary of the securities is required to give a notice of 90 days before it qualifies to be taken over. So remember, important point over here is means debentures remain unpaid. What do you mean by debentures remain unpaid? It means, let's say I am a bank. Okay, I am a bank. Okay, and what have I done? I have purchased this debenture. Now the arrow is towards me. I have purchased from any company, let's say Kingfisher Airlines. Okay, Kingfisher Airlines. If it has purchased this debentures from this Kingfisher and now this NPA, it has become NPA. So when will it become NPA? It will become NPA before, if this Kingfisher Airlines or this company is unable to pay the debt, means pay this amount which the bank had given to this Kingfisher. It's a sort of FD. Bank had purchased this FD from Kingfisher Airlines. So if this bank is unable to repay this bond within a period of 90 days, so in that case this becomes NPA, and then the bank can sell this to this ARC, and then ARC can recover it from the customer. What are NPAs? Here, banks and other financial institutions are required to classify the debts owned by them into following four categories. Standard, substandard, doubtful, and loss. So standard is okay, standard is not an NPA. Remaining these three are NPAs. Okay, so these three become NPA. Got it? Now let's come to the questions. The balance amount for purchase of price payable shall be paid by the purchaser to the authorized officer on or before the such extended period as may be agreed upon in writing between the and the secured creditor. In any case, shall not exceed 3 months. 3 months. Okay. In any case, not exceeding 3 months. So, what is the answer over here? The balance amount of purchase price payable shall be offered to the purchaser to the authorized officer on or before. So this is your real question, on or before. What is the real answer for this? How many of you know this? Have you done this, anyone? Yeah. Have you done this? Anyone has dealt with this category? Anyone up till now? So what is the answer for this? Yeah. For how many days? Means how many? What is the point over here? Okay. Yeah. Let me see how many of you can answer this. Let's see. Then I'll definitely give you the answer. Okay, I'll give you all the options first. Okay. Okay. Let's see all the options. How many of you can check this? Okay. Yeah. What is the answer? Yeah. Everyone. Yeah. So yeah, let's see the 20th day of confirmation of the sale of the immovable property, 15th day of the confirmation of the sale of immovable property, 10th day of the confirmation of the sale of the immovable property. So on or before which date? It is on or before, it is 15th day. This is the answer. 15th day is the right answer. Okay. So this is an from exam point of view, if any question on ARC comes, these questions may come. So 15th day, on or before the 15th day. Next one. How to reserve the price of a sale of a secured immovable property shall be fixed. Means how the reserve price of for sale of the secured immovable property shall be fixed. So how is this reserve price fixed? What is this reserve price? Base price. By obtaining quotations from the persons dealing with the similar secured assets or otherwise interested in buying these assets. By obtaining quotations from the persons dealing with the similar secured assets or otherwise interested in buying such assets. So, dealing with the similar, otherwise interested in buying such assets. Both these seem to be the same. Okay. So, let's move it. By inviting tenders from the public, and all of the options are correct. So, what can be the answer over here? Which one? It is all of the options. D, correct. See here, by obtaining quotations from persons dealing with similar secured assets or otherwise interested in buying such assets, that is also an option. By inviting tenders from the public, that is also an option. So second, both of them. So all of the above are correct. You just name this A, B, C, D, okay? Now again, A, B, C, D. Let's name this A, B, C, and D. The certificate of sale issued by the authorized officer shall contain price paid, specifications of the movable security asset sold, the name of the purchaser, and all of the options are correct. Now this is simple one. Security receipt means what? It is issued to the QB, qualified buyer, by that ARC. Okay, so what will it contain? Obviously it should contain all these, because who has purchased it? It's like an FD, let's say, simply FD. So what is the amount invested by that person? Price paid. Specification of the movable security asset means for what it is paid. And third, name of the purchaser, isn't it? After taking the possession of the movable secured asset, and in any case before the sale, The authorized officer shall obtain the estimated value of the movable secured assets and thereafter, if considered necessary, fix in consultation with the secured creditor the dash of the asset to be sold in realization of the dues in the secured creditor. So, what is the answer to this? What? The dash. It is dash over here. The dash of the assets to be sold in realization of the dues to the secured creditor. So, what is the answer for this? See here, always the company will deal, ARC will always deal in one price only. That is called as reserve price. Reserve price means what? This is a minimum price which I want. I can't sell it below this. Okay. So anything beyond this is welcome. The authorized officer may sell the movable secured asset taken possession under the rule 4.1 in one or more lots to secure maximum selling price for the assets to be sold by adopting, which is the method to be adopted by that authorized officer. Authorized officer means what? Authorized officer of the ARC. How can he sell these assets then? Obtaining quotation from the parties dealing with in the secured assets or otherwise interested in buying such assets. Holding public auction, including through e-auction mode or by private treaty. Inviting tenders from the public and all of the above options. So call this ABCD again. Let me see how many of you can answer this. Yeah, very easy, isn't it? Simplest question possible. It is correct. It is D. The authorized officer can go for any of these, obtaining quotations, holding public auction or inviting tenders. All of these, see this, quotations, auctions or these tenders. All of these can be done, isn't it? Everyone kindly download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material plus live classes, ebooks, tests, everything you will be getting. Whatever you need for clearing these entrance exams, promotion exams, JIB, CIB, you will get it over here. Subscribe to Officers Adda 24/7 YouTube channel. In this channel, you get all the latest updates on all the topics of banking, all the exams of banking, plus you get free YouTube series on all the subjects, including CCP. Okay. Now this bank promotion Mahapack, join it ASAP. Clerk to scale 1 to scale 2, 3, 4. Bilingual and English medium. Both of them are available. So join it ASAP. How to join this? Here. There are various special offers going on. Always take the benefit of those offers. Let me show you that also. Go to Adda 24/7. In fact, I would always suggest you to go through the app. If you're having the app, go through the app always, because app gives you the benefit of coin system. In coin system, you get a chance of winning 1% extra. Okay, so that's why go to Adda 24/7. One sec, let me take you there. Go to Adda 24/7 over here. Hold on. Look at this. Okay, so here we are. So at Adda 24/7, click on this IIBF certification, CIB, this skill promotion, bank promotion. Okay, click on this bank promotion. Then you will see this offers, bank promotion Mahapack. Click on this Mahapack. Okay, once you click on this Mahapack, you will see all the details of the Mahapack. Important is recorded videos are available. Okay, recorded videos are available so that if you miss out on any class, you can get back to it. Okay, buy now. Click on buy now. Now look at this. Once you click on buy now, you will see the details. See here. Apply the offer, whichever is the maximum offer available. Right now, apply the flash offer, FLASH. Okay, flash. See this. You have got 77% off. Earlier you are having 75. Now you are having 77% off. Use this code immediately and join it. Okay. Bye from my side. Keep studying and do join the batches immediately. Okay.